Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by Zoetis. From chores to parasite control, the best ranchers have it covered. Dectomax injectable from Zoetis protects against 36 types of little parasites, including adult parasites, L4 larvae, and inhibited larvae. Visit zoetisus.com to learn more. Commodity markets proved to be choppy this week as a flurry of headlines drove erratic trading behavior. Newly active lockdowns in Shanghai, China's largest city, prompted some early week selling in energy markets. This downward price bias continued into Tuesday with early reports of Russian de-escalation in two major Ukrainian cities. Not only were crude oil and natural gas lower through Tuesday's close, but so were the major grains, corn, soybeans, and wheat. Wednesday's military activity in Kyiv and Chernihiv proved the de-escalation reports to be false, causing several mid-week price reversals. Rebounding crude oil prices were reversed again on Thursday when the Biden administration moved to release oil from the Strategic Petroleum Reserve. The emergency oil release will take 1 million barrels per day out of the SPR for the next 6 months. U.S. implied crude oil demand was around 18.5 million barrels per day last week. A release from the SPR is short-sighted, trading some energy supply over the next 180 days by sacrificing 32% of the nation's reserve stocks. Spot market WTI crude oil futures traded below $100 per barrel on Friday after opening the week above $112. Natural gas markets were surprised Thursday after Russia declared future gas payments would need to be paid in rubles. EU leadership pushed back against the order, but U.S. natural gas prices went higher, anticipating more demand for exported product. Spot Henry Hub natural gas futures are up 19% over the past 3 weeks. The natural gas strip was down by 7 cents on the week after closing at new decade-long highs on March 25th. Thursday also brought fresh headlines and fresh data to the grain markets with the release of the USDA Planning Intentions Report. At the USDA Ag Outlook Forum, forecasts called for 92 million acres of corn in 2022. The report yesterday showed U.S. farmers intend to plant 89.5 million acres, 3% less than the pre-report estimate. Soybeans found the lost corn acres with planting intentions at a record high 91 million acres. Total principal crop acres were just shy of 318 million, close to full cropland capacity without reaching into CRP lands. Spot corn futures traded as high as $7.70 a bushel on Thursday, but will finish around $7.32, down 22 cents on the week. Spot soybean futures were down $1.10 per bushel through Friday's close, the lowest settle since late February. April live cattle futures were down 1.32 cents per hundredweight this week, and June live cattle was down $1.22. In the cash, fed cattle traded in the north at $1.38 to $1.40 per hundredweight live, steadied $2 higher than last week. Moderate trade developed at $1.38 in the south, steady with last week's price. Thanks for watching. Remember to visit CattleFax.com to become a member. See the latest market news and analysis.